Well, hello, Maverick Currency traders. Happy weekend. This is Rob Reinhold. I'm joined by Ankit Sharma, and this is the Currency Room. We are going into the second week of June, so let's jump into it. In this session, we're going to talk about what happened last week. We're going to take a look at the broad markets and some of the commodities. Then we say, let's forget about everything that happened and take a fresh look at the technicals. And we're going to score everything from a +3 to a -3. And we're going to take the strongest and we're going to pair it up against the weakest. And those are going to be our target trades for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
We got new all-time highs in equities, and I gotta say that last week I called for a bounce, but I said I don't think we have the gas to go to new all-time highs. The market did not listen to me. Rarely, actually never, the market listens to me. But we did go to some new all-time highs. Ankit, were you surprised that there was all-time highs this week?
I mean, I was kind of surprised, where we closed off last week, we broke out and then we just fell right back into the range. So I expected maybe to go sideways. I didn't expect that the market's going to come roaring back into the new high. So definitely a bit surprised there.
Now, we did make new highs on Wednesday, but we really didn't add much onto it after that. So we'll take a look at the charts here in a second. We did get some rate cuts from the ECB and the Bank of Canada, and these are the first G7 countries to cut rates. The big question is there going to be more to follow? The Bank of Canada said there is more cuts coming. So we'll have to take a look and see how that affected the Canadian dollar. And the cryptos, at least Bitcoin, Ethereum, were trying to make a break to all-time highs. I thought they were going to do it on Friday, and they kind of got caught up in some selling related with AMC and GameStop. The hot money started to come out of the market on Friday. Let's take a look at the economic news that we got last week. Right, first thing I want to point out, we got some stronger than expected manufacturing out of the U.S., and then we got some lower than expected job openings out of the JOLTS report. And then I want to point out one last thing, much stronger than expected ISM services. So look, these are like mixed signals here. So job openings were much lower than expected. Manufacturing was higher than expected. Remember, the Fed is kind of neutral here. It is not in a hurry to cut, and it's definitely not going to raise anytime soon. So that's where this market is, and the market is trying to figure out where's the next move. When is the Fed going to cut? Because we have two cuts already on the board, and the Fed doesn't really seem to be close. Let's take a look at some news outside of the US dollar. We had Aussie GDP weaker than expected. That did put some pressure on the Aussie this week. And then let's take a look at employment reports. Employment reports, look at that US employment report. This was a really strong report, and not just a really strong report on the headline number, but I said that if this average hourly earnings comes out higher than 0.3, it's going to be a little problem. Now, I was going to say a little problem for the markets. That's what I said last week. Here's what happened. It was no problem for the stock market. The stock market actually went down a little bit, and then it came right back up. But where we saw the big moves is the dollar and the bonds had big moves off of that higher than expected average hourly earnings and the new jobs created. This is really putting the Fed back on hold. Now, I did the video on Wednesday right after Bank of Canada came out and we were getting some soft data, and I said, my call has always been no rate cuts this year. That was my call in January, and I've been consistent. And I actually thought, we might get a rate cut this year. We might get one. This report has made it to where I no longer think we're going to get one in the next 3 months. Could we get one in the fall? Sure. But this really took any imminent rate cut off the table for the Fed. Ankit, would you agree with that?
I agree. I mean, if you just take a look at the bets, there was, everyone is expecting other central banks to follow suit, and I was kind of in the same boat. So I think with this data, this is definitely going to put a lot more pressure on the FOMC going to the statement next week. And I think that's where we can really see some fireworks, especially if we see the statement really sort of varies from what we see in the data here. So I think next week again will be a volatile week again, but we'll find out which way it goes. But I think maybe this is where we could see this divergence. Maybe FOMC stays on hold and all the other central banks start to cut rates. And I think in that case, there's a good chance that the dollar might stay strong and all the other currencies start to weaken. So I think we're at this interesting spot here where there's an opportunity with this divergences that we are going to get from these central banks.
I could not agree more with that assessment. Let's take a look at the numbers from last week, and then we can put this last week to bed. So we had equities up about 2% in the US, 1% overseas. Crypto had a nice week until, like I said, on Friday, they got hit. Gold sold off, oil sold off a bit. So look, this was really more of a story of equities this week than anything else. Let's take a look at this S&P chart. So we talked about how we had this pullback last week. We pulled back and we had this nice hammer candle. And then it took 2 days to get going, and then we had this breakout here. At this point, okay, we're hanging out up here. We're hanging out. Are we going to do more of this where we rally up to new highs, or do we do more of a base? I'm still in the case that this is more of a +1, +2 market. No, look, it's +3. This is a very, very strong bull market. But I think over the next week or two, I see more of a grind higher than a sprint higher. That's just what I'm seeing here in these charts. I'm not seeing a ton of energy like we were back here. I mean, this is energy. Look at this. That's energy that we have a lot of things going on, opening at lows, closing at highs. Look, we've got lots of red candles mixed in. We've got some dojis. To me, this is just not as strong. I am still very, very bullish, 100% bullish. But the pace, I don't think is going to be a very strong pace going forward. The performance last week was a little bit different. Again, we had a risk on market in equities, and we had a risk off move in the Forex markets. As you can see, the yen, dollar, Swiss franc were all up, and the yen and the Swiss franc up substantially, and the CAD, Aussie, and Kiwi were down. So this to me is the big question of Forex. Are these just pullbacks? Are these just short-term pullbacks and rallies, or is this going to keep going? Now, this has only been 1 week. We've been having risk-on moves until this week. This could be a really good opportunity going forward if they are pullbacks. We'll take a look at all these charts, everybody. Here we see that Bitcoin was up almost 4% for the week. Everything else fairly flat. Let's jump into our scoring. Let's score everything and go from there. We already took a look at the S&P. It's at a +3. Here's bonds. Now, I just want to point out some really key places we were down below 4.3. Below 4.3, that was the market saying, oh my gosh, we might get a rate cut soon. And this move was, okay, we were wrong. We were wrong. I actually think the expectations going into the Fed meeting this week are going to be very, very critical to what actually happens after the Fed meeting. Here is the crypto basket, and I don't want to spend much time on the crypto basket because we've seen Bitcoin and Ethereum are great. Everything else is garbage. And so that means that when we have a basket where we're looking at Bitcoin and Ethereum against some others that are garbage, it's just flat. It's just flat. Everything else is underperforming. You really want to be concentrating on Bitcoin and Ethereum if you're going to be in crypto. Next week, big stuff on the schedule. Big stuff. Let's start off with Tuesday. We got the UK claimant count change and GDP. So big news if you are playing the pound, make sure that you are watching this news. Both of those reports out at 2 a.m. On Wednesday, I really hate when they do this, but look, the Fed meets every 6 weeks. Yeah, every 6 weeks. And every so often, the CPI and the Fed will fall on the same day. I like to trade both of these. I like them to be individual, but on this one, they're going to be fairly close together. So we do get CPI in the morning, and then we get the Fed after that. Look, I'm going into this. There's no question that the Fed is going to hold rates. That's like 100%. The question is, what do they say? And not just what they say, but what are the expectations of the market? 3 days ago, the expectations of the market was that the Fed was going to give us a rate cut pretty soon. And you can see that was taken back today on Friday. And so I really am just curious of where the market is going to be on Wednesday. Now, we're going to get the CPI, so there's going to be another adjustment to what traders and investors think the Fed is likely to do. The expectations right now are that we are going to get a rate cut. Those are the expectations. You can look them up. People are still expecting that there's going to be a rate cut this year. So if the Fed takes that away, then we're probably going to see higher dollar, higher bonds. Ankit, what do you think about that?
Yeah, I mean, I'm more in line with, exactly what you said. I'm going to the next meeting. I don't have a strong bias, but I think they would be a lot less dovish than what everyone is expecting. So I think even though if they are not as dovish, this might still be stronger overall based on where we are at. So yeah, I'm more in line with that.
We're going to be sending out a video on Tuesday with a preview of the CPI and the FOMC so you can get ready for it. Wednesday night, we've got employment out of Australia. I'm looking at this Australian dollar weakening. It's been fairly strong over the past 2 months. I like it weakening. I do like it short. But again, employment report on Wednesday is going to be very important for that. I don't think you need to worry about PPI. Look, we just had a major day from CPI and the Fed. Market's going to be tired. Whatever the PPI comes out, I don't think it's going to matter. And then our second central bank of the week, and probably going to be a bigger mover than the dollar, is the Bank of Japan. I am going into this meeting with no expectations of anything. I'm going into this meeting as a spectator. I am not looking to actively trade yen here. I think it's a tough trade. I think there's easier trades out there. And so why go chase after the tough trades when there's easier stuff on the board? So make sure you know what's going on this week. Make sure if you're trading any of the currencies that have central bank announcements or economic reports that you are dialed into it. Let's go score everything from +3 to -3. I'm going to go through the cryptos. Ankit's going to take us through Forex, Bitcoin. All right, look, Bitcoin, if you go back even further, Bitcoin has been hitting up against 72,000 several times over the last 6 months. So 6 months we've been basically basing. We came up and we hit it again, and look at that, we fell. Okay, so all this means is it's not ready to break out yet. I thought we were going to break out this week, and we did not. All this is telling me is that we're stuck here. So at this point, where do I want to look at taking possible positions? I really like the bottom of this range, 67,000. If we can pull back to the 67,000, 68,000 area, put in a green candle or two to where we actually, come down and then we have a green candle or two, I like that for an entry because we may come up and bust through it on this next run. Who knows if that's going to happen, but this chart is screaming it wants to break 72,000. It's absolutely screaming it. Now, when I was a young trader, and I learned about a double top, I thought double tops were the coolest trends, or not trends, but market patterns. Like a double top, you just shorted a double top. Well, when I started getting into it in practice, sometimes it worked, but a lot of times it didn't. And then it went up and made a triple top. And then I thought, let me do triple tops. That's even better. It actually was worse. The more times something knocks on the door of a support or resistance area, the more it wants to go through it. So a triple top is just telling you, hey, this thing really wants to go higher. It really wants to break out. It's there 3 times. We've had about 6 tests of 72,000 on Bitcoin. I like it on the bullish side, but right here, right now, the velocity is not there. It's not there. We just had a failure. So look, let it come in. Let it come down to the 67, 68,000. See if we can get some buying there. If so, I think it's worth taking a position. As we talked about Bitcoin Cash, I'm totally uninterested. I'm not even going to waste anyone's time on it. I'm totally uninterested in it. Ethereum, pretty much the same thing here. We've got a nice base forming. It's a beautiful base, but nope, it failed. Failed to break out. So it's just telling you it's stuck in the base. I still like both of these cryptos, but I don't like them early next week. I just don't. Litecoin, again, not interested whatsoever. Okay, run us through the Forex market.
Absolutely. Let's begin with the good almighty US dollar. Well, again, I've talked about how the dollar has been moving. This is sideways. The more we try to find out where the trend is, and this week we had a nice chance for this to actually break lower. And then they just snap right back into the range. So where do we go from here? Well, until we really break that support and resistance that's drawn on that chart, not really going to be, looking at an extreme play here. I think mildly bullish to mildly bearish until we break that level. So I think this is going to be a news play going to next week. Wednesday, it's all going to come down to Wednesday. And after that, I think it'll probably be easier. But we just have this back and forth sideways range here. So I think dollar is it's a tough long and it's a tough short. And the reason behind is this moving of the bond yields that we're getting from these economic data and the central banks. Now, outside of that, the Bank of Japan, well, that's the one that I know a lot of people are focusing on. But I think this is one of the trade that eventually, when something happened, it's going to be huge. But timing that is impossible here. So going to this, again, I don't have an expectation, just like Rob said. I don't really have a strong expectation. But this one, always be careful when you are trading or in a yen trade going into this news event. So this guy could be could be a non-mover or could be a huge mover. I think that's just the way how the Japanese yen is moving. Now, after these two, I think the other focus that we had a big trend change was in the Swiss franc. Swiss franc was the weakest currency for the most part this year. Now that's just turning around. So this thing has a big shift. As you can see, that it's just holding on to the gain. So at this point, I think we had to shift with that market. Overall, you can see that even with that run, we're just consolidating, which is telling me that Swiss franc likely to go higher than lower in the shorter term. So going on the bullish side for the Swiss franc, I like the setup here off that consolidation. Now, on the other hand, euro is the one that's not moving at all. Remember, we talked about how one currency is likely to be more in play, and this thing is not in play. So if I really have to be trading, I got to trade this Swiss franc. I have no interest in trading the euro here. This thing is going sideways. And even if we compare this to the pound, I would rather trade the pound here because this thing is trending. And you can see that we broke out, we pulled back prior resistance is still the support. So this is again will be the breakout play I'll be looking into next week, especially off that GDP and the employment report that we have on the docket on Monday and Tuesday. So that's the catalyst that we have coming, but I still like this on the further upside. Now looking at the other currencies like the Bank of Canada had to really put that dent in this trend. We've seen the Canadian dollar did move ahead of that report because that was expected. This thing, I still like it more to the downside than I would to the upside. Could there be some rallies in between? Absolutely. But I think overall, if you look at the trend, as long as it stays below the 20 to 50, I like it more on selling on the rally. So shorter term, velocity is strong, so I don't want to be shorting it. But as we get up around the moving averages, I think will be a good area to look for some sort of a sell-off off the rally there. Now, the Aussie and the Kiwi, we want to talk about these currencies because, like Rob said, Aussie has been doing really well. I think that this is about to change, especially if the dollar stays strong. I think this momentum is now fading. We are just hanging off the thread by that 50 moving average. But if we just stay consolidated in this level and just break lower, I actually like the Aussie short here, which I haven't for the last couple of months. So I actually see the trend has really shifted, and this is where we have to shift with that trend. And lastly, the Kiwi. Kiwi, again, been an outperformer compared to the Aussie, but you can see that after today's move, Kiwi did pull back as well. So this one doesn't have that big technical damage, but I think this is where we could start to see, this one deflating a little bit. But I still like Aussie much better compared to the Kiwi. So if I have to be really choose one or the other, Kiwi still looks like a pullback to me, where the Aussie seems like it's turning its trend. So I think at this point, we really got to pay attention to these change in the trend scores. Stronger getting weaker and weaker getting stronger. And I think we have to make that adjustment with that.
Thanks, Ankit. And so here we are on the trend score. And really the one thing to note here is Swiss franc. Now, I have liked Swiss franc short. I have played Swiss franc short a lot over the past couple of months. And guess what? It's telling you it doesn't want to go down anymore. It had that massive rally off the bottom. And what did it do off that rally? It just based. It did not pull back whatsoever. So it's telling me we want to go higher on Swiss franc. I love shorting it, but sorry, Swiss franc. I'm now going to be buying Swiss franc when there are some good setups. I like pound. I've liked pound for the last couple of weeks. Pound is my favorite currency cross. It still is. And Aussie. I like Aussie on the short side. I like CAD on the short side. And yen, I like it short, but look, I've been trading for 27 years. I have no problem saying I'm scared to play the yen right now. Now, you would think that, someone who'd been trading for 27 years would puff out their chest and say, oh, I can handle this. No, trading tells you, hey, there are some situations you just don't want to mess with. Don't go in and play with a snake. Just don't. Yes, you might hit it, you might do it, great, but you also might get ruined. It's not worth it. It's not worth it. I have no problem saying that I, right now, am scared of playing yen, and because of that, I'm not going to play it. So, I'll just leave it until it calms down, and then I'll play with it when it is looking much better. What's moving right here, right now? So early next week, pound is moving to the upside, dollar's moving to the upside. CAD is bouncing, but it faded pretty hard on Friday, so I'm not really looking at CAD. I think dollar can be played in both directions. I have no problem playing dollar, long or short. If you take a look at it, it will have 2 or 3 good strong candles up to resistance and then 2 or 3 strong candles down to resistance. That's a decent trading opportunity. So I'm looking at pound and dollar strong, and I'm looking to short Aussie, number 1. I do agree with you, Ankit, that the Kiwi is going to fade, but I don't really love it. I'd much rather play like an Aussie short, or if it's a yen short, I want to play that during the US session. I don't want to be holding yen overnight when there could be some Bank of Japan intervention. Let's go ahead and take a look at some of those currency crosses and see if we can find any actual setup points for our trades. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? I do want to spend a little bit of time here on Bitcoin. Like I said earlier, it's just not ready to go. It's not ready to go. I would love to see a pullback continue down to like 67, 67.5, somewhere here, and then give me some green candles. Give me some price action like we saw over here, and just show me that it's going to hold this level. And then we can start to look at taking positions and possibly get the run that breaks us out to the upside. But you can see buying right here, right now, it does not make any sense. It doesn't make any sense whatsoever. Let's go to my favorite cross. And again, I took a position on this one on Friday. This chart, I've been watching and waiting for this chart, and it finally triggered for me. I really like how this chart is setting up. We've got this downtrend line. It broke out. It broke out of this base. We broke out. Everything is turning. Everything's turning on this thing technically. Look, that doesn't mean that it's a guarantee. There are no guarantees in trading. But what we do know, if we make this trade 100 times, we'll be happy at the end of it after 100 times. That's how trading and technical analysis works. Question is, where's the entry? We just had a big run, had a big burst of energy. What is likely to happen? I think we're likely to see more of a base up here than a pullback. So for me, you either are going to look to buy the bottom of the base. And look, I don't know where the bottom of the base is right now because we don't have any candles. But let's say this thing pulls back. Say it pulls back, finds some support here at the 192.90 area, and then it hangs out in here. I want to start taking a look at 192.90 as places where I could take, half a position, a third of a position. But a breakout at 193.30, that is the point where you want to be. If you don't have a full position on, you want to be building up to a full position. The best breakout point was back here. I've jumped into this one. I like this one. This is my favorite trade for the week going forward. As I said earlier, I don't mind playing dollar. I don't mind playing dollar here at all. Look, you can't buy dollar and hold it for a month. That's just not what's going on here. You can hold dollar, you can buy dollar and hold it for 2 days, and it could be a decent trade here, but only when things are actually trending and moving. We have a big fall here, likely to get a base. We don't know where the base is going to be. Let's let this base set up, and then again, same thing. Once the base sets up, you can start taking some small positions up at the top of the base, and then when it breaks down at the bottom, you want to be starting to really build up your position. Okay, is there anything you want to take a look at?
Hey, Rob, the only other pair that I'm really like here on technical basis is the Aussie Swiss franc. And this again start with the daily chart and the 4-hour. You can see that how this thing is moving lower. It's below the 20, below the 50. We got a little bounce there, and then that's just moving lower. So I think there's more downside risk here in this pair, getting down to the support that we had previously. 4-hour chart, again, this is where I can trade on an hour, the daily chart or a 4-hour chart. They're all sort of lining up. They got a little consolidation here, and it's pulling back. So I actually really like, along with that pound Aussie, I actually do like the Aussie Swiss franc here as well. Again, both of the same trades. We like the Aussie short. It's just a matter of what you're pairing with. It's pound as a +2 trend score, and so is the Swiss franc. So I think we can go with either or. This is the one that I'm going into it next week. And regarding dollar currency pairs, I think Aussie dollar is the one that we can continue looking at, especially on dollar strength. I think just realize that this dollar play next week is going to be a volatile play. So you're going to be a big move either way. So you can really go in with the plan that whichever way you want to swing. But you can see that on this chart here on Aussie dollar, it's now fallen back into the range. So maybe we're going to continue moving back and forth within the range. But for the setup, we can take a look at it on our 4-hour chart. We had a big move today, but we will probably see some consolidation on Monday and Tuesday. And I think that's really where I want to be. I want to see some consolidation on Monday and Tuesday, and then look for some breakout or continuation patterns going to Wednesday. So I'm looking to stay flat till Wednesday. That's where the big move's going to be, and I'd like to be active after that. So that's the game plan, Rob.
Thanks, Ankit. So again, everybody, FOMC on Wednesday, expect there to be a lot of volatility, expect there to be a lot of whipsaw moves. Again, runs up, runs down real quick to hit stops. Let's not mess with that. Let's just be calm and patient. Let's get some positions on after that. But stuff like, pound Aussie isn't really going to be, it will be affected by FOMC, but not as much. So I'm okay with currencies like that. But if you're looking at anything dollar, yen, euro, there's going to be lots of volatility on the FOMC statement on Wednesday. That is it for us. Everyone have a great weekend. Take care, everyone. Stay safe. Goodbye, everyone.